All right, we have a very interesting week shaping up this week. We've got CPI coming out and Core coming out, which is basically stripping out food and energy, basically a big measure of inflation that the Fed likes to look at. And then the Fed is meeting this week, which will be after the CPI print on Tuesday, and they will meet and make a decision on the Fed funds rate. And so these are big things that are going to impact interest rates. I've been saying, and we'll see if this starts to happen, that from July 1st on, you're going to see a noticeable change in the market as far as rates starting to tick down. My opinion, by the end of the year being under 6%, maybe closer to 5.5%. And what will have to happen for that to happen this week will be we'll need the CPI to come down. It was 4.9 at the last reading. A lot of experts think it'll come down to 4.3 to 4.2. Core was 5.5, and they think that will come down to 5.2 or 5.3. If both of those things happen, then the Fed will likely pause, meaning they will no longer raise the Fed funds rate. They're probably going to be a little more optimistic on not needing to raise the Fed funds rate, and those things will start to trickle the rates down as far as interest rates go. Remember, the Fed doesn't control interest rates. They influence interest rates through the Fed funds rate, but I believe that will start the mark of the steady downward trend in rates, which will most likely increase mortgage demand. We'll come back to that, but look right here. I thought this was a cool chart. So in January, it was market crash, market crash, market crash. Fast forward to April. This is came out May for April. Zillow showing a 1.4% increase month over month. That would mean if that you would have stretched that out over a year, that would be like a 12% increase in home prices, just this year on an annualized basis. Now, do I think that'll happen? I don't know. But what does that say is that the market is picking up steam again for all the reasons that we've talked about. Very limited inventory. Buyer demand is down, but I think rates are going to fall, and that's going to increase the amount of people that want to buy. If you look right here, interest rates, 6.9% was the average for last week. Remember, everyone's rate is different. And if we look right here, you can see we've just been really trading in this range for a while. Now, I think that this week will, again, mark the breakout of that 6.5 to 7% range. We will see. I'm pretty sure, I'm almost 100% sure the CPI will come in lower, Core will come in lower, and the Fed will pause, and then we'll just see how the market reacts after that. I will say that on the supply end of things, nothing's really changing. I pulled up this Florida housing supply, and you can see here we're back to 3 months of inventory in Florida, and this is really something that's happening all over the nation. That's why you're seeing prices starting to tick up. There's just no meaningful inventory. And I had this debate again with someone else, which is if you can tell me where the inventory is coming from, then I would agree that prices would go down, and no one can say where the inventory will come from. Builders aren't keeping up. I do get these click things. My wife actually sent this to me on foreclosures. This article showing home foreclosures are rising nationwide with Florida, California, and Texas in the lead. Sounds really ominous, but when you scroll down in the article, they talk about that we're actually still below pre-pandemic lows. And I like to look at the data. This is foreclosure rates from 2012 on, and you can see foreclosure rates are still kind of at record lows. So again, those articles, great clickbait, but again, foreclosures aren't going to save or put more, supply on the market. And what about regular people that are sitting on these homes? So I took this chart up because I really like data. If you look right here, this is interest rates. So you can see we have all of these people down here that bought homes or refinanced their homes, and this is where we're at now. I drew this red line at about 5%. I don't know where this magic number is, but there is a place where all of these people here, this is pent up supply. And the reason is just from going, for instance, on a $400,000 loan amount from 3% to 5%, that's still about a $450 increase in the payment. That's just for a lateral move. So at what rate will these people, myself included, I own real estate, is it worth exchanging in that equity for a move up, something different, a bigger house, all the different things? Now, people always have to move for particular reasons, which is why there'll always be inventory. But to keep up with the demand, because if you look at where we're at here, if rates fall down to here again, and I think they could be under 6% faster than what people think, that's just going to drive more and more demand. We're not going to get any meaningful supply on the market. And so if you're wondering what the market's going to be like this year and next year, in my opinion, it's going to feel a lot like it is now. If you're working with sellers, Anecdotally, I talked to a lot of agents that all over the nation, because I'm part of a coaching group where I coach new loan officers. And it doesn't matter what market, any major market is actually having the same things that we're having, which is limited inventory, prices going over asking. And I just got a couple contracts in the first time in a while where people have waived the appraisal contingency. So you can see as rates fall, things are going to heat up. Supply is probably not going to come on in a meaningful way. And this is probably the new normal that we're going to be dealing with throughout this year and next. Great news is a lot of people doing well, a lot of agents having record months and quarters, which is amazing. We've definitely picked up. Lower rates do drive more buyers into the market, which is good for me on the mortgage side and anyone on the lending side of things. So I think there'll be lots of opportunity. I think the market will be out of balance for the next foreseeable future. We shall see. No one knows the future, but that's the report for this week. We'll see what happens with CPI. We'll see if the Fed decides to pause, and we'll look at rates next week and see if we'll come off that 6.97% range that we've been trading at for a while. Anyways, have a great week. If you have any questions on this or anything else, reach out to me. I'd love to help. This is RAYCE Robinson, your favorite Florida mortgage broker. Have a great week. Talk to you soon.